Happy Sunday, apprentices. So when you get a new pet, you bring a dog home, do you weigh all the risks that are involved? Or are you the type that just gets the dog and says, I'll manage that risk as we go? That's what's next on today's show. Trading Forex or any other financial instrument carries substantial risk. The topics discussed on this show are the views of the host and the producers only. You should consult with your financial planner before investing in Forex or any other financial instrument. Don't be a dumbass.
Welcome to Day Trading Plumber, episode 56. I'm Matt Simpson, but you're not here for me.
So the dog has been an interesting dilemma.
He got away this morning.
Yeah, he bolted out the door. I had the gate open, which I shouldn't have.
You took a risk.
Took a risk. There's no reward without risk. We could sit there and dissect that and be like, well, someone drops $50 million out of their card, you pick it up. Now you got reward. Really no risk. However, the person could come looking for it. You're going to live with that guilt. Getting a new dog, I had 1,000 reasons. What if he chews my couch? What am I going to do? Because I got to go on a trip pretty much the second week I get him. What if the kids don't like him? What if I don't like him? All these things. We talked about it in the last episode. Like, that's why people give up dogs, right? Or take it back because he's not the perfect animal. Trading and putting money or capital at risk in efforts to make more money is a lot of the same things. You could talk yourself out of any trade. You could talk yourself into any trade. That's why this is more of a psychological game than most people see when they see it from the outside and have never done it. They think it's all about how smart you are, or there's some secret code, or there's, it's all rigged and you're just not on the inside. You could find supporting bias both ways. Now, how do you become consistent and successful at trading or investing is you understand risk to reward. You understand how to get an edge, right? By simply knowing the historical data and then having the experience and the knowledge of how you're going to act emotionally with that trade. Because every time, I don't care how long you've been trading, every time you hit buy or sell, your heart rate increases, your focus, you start watching, your brain's processing 100 miles an hour. Oh my God, it's going against me. What do I do? This is where back testing, knowing that strategy, you've done it 1,000 times. You put together a strategy, you optimized it, which, some people optimize it too much. They try to be perfect, right? Like in our chat group, our buddy Hank, he's struggling right now because he's building a robot on a strategy we kind of put together in the chat room. And he keeps optimizing that to be perfect. And I'm like, dude, it's never going to be perfect. And every time you add a new filter, a new problem rises. So strip it back down to the basics, find something that's profitable and something that's going to fit your personality type, your trading personality, and just accept you're going to have losses. Once you've just given that in, it gets a lot easier. You just set your risk to reward, what fits the win percentage of a certain strategy. And you still have to factor in that's on historical charts. I mean, this COVID has woken everyone up, or at least people who don't trade every day, that anything can happen. I mean, would you, on New Year's Day, would you ever expect, yeah, every business is going to be shut down? We're all going to be wearing masks as part of our clothing. I saw a store open up in one of the last malls, if malls are even a thing anymore, COVID-19 store, and they're selling masks.
I love capitalism.
Yeah. Could anyone have predicted that? And then even me, right? When we shut down and there was no definite end date, and our government and people were all left to just kind of theorize on their own, I was like, there could be no bottom to what happens. But the overall optimistic, everyone's biased stock equities wise caused that recovery. And let's just face it, the market's going to do what the market wants to do. It picks what it wants to do. It said, sell. Oh, well, we don't really want to cause a depression. So come on, let's all get long again. So risk to reward is one of those things. It's easy to define, but hard to get the point across, because everyone's idea of risk is different. We've talked about this in, one of the early episodes where, like my mom loses $20 and she'll be like, oh, I'm never doing that again. Never. Right? Never. Just wasted $20. So like she doesn't gamble, buy scratch tickets. She's just that personality type that's not caught up in what could be. It's more of, I know I'm just donating $20. And then, there's some people that will risk massive amounts and just go into things blindly and just say, you know what? Leaving it up to fate.
Well, you told me this week that you have a guy you were talking to who is on an option in a bad way with Tesla.
Yeah, he's, pretty deep. He falls right into the category of a lot of traders in the beginning. Little early success, thinks, wow, this is easy, and dives all in. Like I said before, the only thing you need to become a trader is capital. And people find a way to get capital, right? Some people come up with creative ways. They take a second mortgage out on their house. They get a cash advance on their credit cards. They borrow it from their mom. They got $5,000 in savings that at that point it's pretty much rainy day fund, which we need. And, they dive right in, and they don't fully understand risk to reward, meaning, oh, everyone's buying Tesla. I'm just going to buy Tesla. It's going to go to the moon. They're listening to Squawk Box or Bloomberg or some guy on Twitter that's like, Tesla could go to 50,000. They're not thinking that Tesla very well may go to 50,000 a share someday. But it's going to have pullbacks. It's going to have periods of consolidation. It's going to have dips. And if you get too heavy at the top, which the sheer way these charts are built is to suck you in because you feel like you're missing out. I mean, we've talked about it a million times on the show. Hardest thing to do is not hit buy when you see it go shooting up, especially if you're already long biased. You feel like you're going to miss out. But risk to reward comes into play where you know where you're going to put your stop loss. You know where you want your take profit. You have to have those two things. Where am I going to get out? If I am right, where am I going to get out if I'm wrong? By knowing those two levels and knowing the distance from where price is now, you can quickly calculate what your position size should be. Now, one key thing that a lot of people don't want to do the work, what is the real win percentage of such strategy? Because you can make money on a strategy that only wins 30% of the time. There's a lot of them out there, actually. Problem is the psychological damage that you go through losing 70% of the time is damaging.
In baseball, you're a Hall of Famer if you're hitting 333.
Right. But people just don't like to be wrong. And in trading, you got to get over that quick because you're going to be wrong. And if you don't get over that one simple thing, you're going to hold on to those losers because now it's about a battle of being right. You go into a trade. You only want to risk 1% of your balance. Now you're wrong. You move that stop to 2%, to 3%, to 4%, because it's no longer anywhere close to the original strategy you started with. It's just about you want to be right. You want a high win percentage. And that kills more traders than anything. I'd say over trading and then not having, you hear it all the time. If you've been searching, it's called risk management, money management. Here's the hard part. If you can't control yourself, let's say you have a 20 pip stop loss. Great. You're giving it 20 pips of room. Well, if you only want to risk 1%, you got to calculate what that position size is going to be. And everyone's like, yeah, but I want to make more money because, if you only have a 20 pip take profit, now you have a 1-to-1 risk to reward. Well, you better have better than 50% win percentage. And a lot of people don't want to do the hard work to know what that win percentage is, or they skew that back testing to have a higher win percentage so they can take bigger positions. When you're back testing, you have to do it in a way that you're trying to break that system. You don't want to be win biased. I find myself doing that a lot. I would have took the trade. Yeah. Or you're optimizing as you go. What I suggest people do to get the true win percentage is write down the set of rules so you have it right in front of you of that system. Better yet, if you could program it into an EA or a robot and just run it to where you're not looking at each candlestick and going, oh, I would have got out there. Yeah, I would have got out there. No, it's a set take profit, a set stop loss that has a risk to reward that you want to start with and run it. Then after you get to the end of it, you can optimize like, hey, I wonder what happened if I used a 200 EMA filter. Then run that and then see if it betters that win percentage or betters your results. At the end of the day, as long as you make money, you're winning. Who cares if you win 20% of your trades? But if you took $5 losses on majority of those trades at $3,000 winners, you're making money. And that's what a lot of people miss in the beginning because they feel like I have to win, right? Like at work. For instance, if I'm a plumbing superintendent and I had 100 jobs and 70 of them were losers, hard jobs, we didn't make money, but the other 30% were 100% margin jobs. And I still, my overall profit was greater than, am I still a good plumbing superintendent? Probably not, because in the real world, people don't view that. Even though you made money for the company, they're going to think, oh man, he's always losing jobs.
Well, it'll be the PMs who are on the losing end of those jobs.
Right. So
project managers.
what's tough about trading is we got to rewire our brain to think, look, man, losses are inevitable. You will never not take losses. Our goal is to have a plan to know how many losses are expected with this trading strategy that I'm using, so you can gauge your risk to reward accordingly. I've heard of traders will only trade if there's a 5-to-1. A lot of day traders try to shoot for that. I will tell you, 5-to-1 is very aggressive and hard to do because you're going to have a super tight stop loss.
Is that like playing in the third deviation range?
Well, to get a 5-to-1, you're shooting for either a really, really big move, which, let's be honest, these big moves happen, but they don't come easily.
So it's home run or strikeout.
Or a 50 pip move, which happens a lot over and over, but a super tight stop loss, which you're going to take a lot of losses. Just pure fact. Those strategies tend to have really low win percentages, but with a 5-to-1, you can afford to have a low win percentage. But the psychological damage you're going to take, loss, 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 big win, loss, loss, loss. You just got to get in the mindset of it that, hey, I'm going to lose more times than not, but that's part of the game. The hard part is you win a couple, most people win 5 in a row or lose 5 in a row. They switch their system. And then they lose 5 in a row on a new system. And they lose 5, and then they're mixing trading strategies. Well, the Bollinger Band with the Fibonacci, and, it's like, have you back tested that? Well, I back tested Fibonacci retracements and I back tested Bollinger Bands, but no, not this formula together. And I'm like, you have no idea if this even works. You're meshing stuff together to work. And that never has an outcome, right? You don't know what your risk to reward is. For instance, in the chat group this week, we had a trader share his MT4 performance.
Which we encourage.
And all of his trades were 5 microlots. And then one trade was 80, 0.8 mini, or no, 0.5, half a lot, like 500 times bigger, 50 times bigger. And one of the other guys in there called him out. Was like, hey, just curious, why is that one 50 times bigger than the rest? I was just really sure on that one. And, it was a big win for him. So I get it. There's euphoria and like, look, guys, I got a big win. What's funny is we never get anyone to share their MT4 screenshot when it's big loser day, right? That's another.
But we expect that.
Right. I mean, no one wants to put out there that they lost. But he very well could have had that strategy called for that size because he had a super tight stop loss. Now, I've said before on the show, I trade a lot without stop losses, and that is more of the robotic system or if I'm planning on doing rollover trades. This day trading strategy or day trading into swing type strategy, I'm not planning on doing rollovers. I'm planning on this is as much as I'm willing to risk, and this is the profit target I'm willing to go. And I typically try to shoot for 1.5 to 3 risk to reward. Now, I'm using pivots as my take profits a lot of times. I kind of go the next pivot or 50 pips. And I'm taking a 20 pip stop loss. So that's a 2.5 risk to reward. The strategy I'm working on right now, that seems to be the sweet spot.
What's the strategy on your MyFX book on that $50,000 account that you just opened last week.
The live one?
Yes.
I'm trading a box, the session candle. I did a YouTube video on it. So if you want to go see what it is, shoot on over to find me on YouTube. But basically, I take the high and low of the hourly candle, for certain pairs and certain sessions. I haven't fully completed my back testing on all the pairs at different sessions, but I'm generally trading the US pairs, the majors during the US session, and then the JPY pairs in the Asian session. But what I'm looking for is that first hour of the open. Except for the US session, I'm taking the 4 to 5 Mountain Standard Time hourly candle, and I draw a box, the high, the low. And when price breaks above or below that box, I take the sell or buy trade. And typically what I'm looking for is price to move to the next pivot or 50 pips. If the next pivot is beyond 50 pips, I'll put my take profit at 50 pips. If there's a pivot before 50 pips, I'll go past that pivot to 50 pips, but I will look at that pivot as a major inflection zone. And if it's right around 38 pips, I might just take my profit at 38 pips if price action's telling me I'm stalling out. One of the things I'm still working out is that management when I'm in that trade. Because my back testing results tell me 50 pips, take profit, 20 pip, stop loss, it still wins money. It's 62% win percentage over 1,000 trades on UJ, right? The USDJPY pair on both sessions. That's a pair I trade both sessions on. So if I just set it and forget it, 20 pip stop loss, 50 pip, it'll win 62% of the time. So it's a winning strategy. You can make that win percentage go a little bit up by managing that trade, because a lot of the losers you get were in profit at some point. They might have went 30 pips of profit and then came down. So thing I'm working on now is, okay, what will happen if it gets to 20 pips of profit and I put it break even? So at least I don't take a 1% loss. I just break even. How does that affect? Now, when I did that little experiment on just 4 weeks, I found it made absolutely no difference, because a lot of times when it went 20 pips, it went all 50. Or it knocked me out of some really big trades because it came down and I went break even. And a lot of times it retests that level and then went 50 pips. I took less losses. Well, I guess break even still counted as a loss on your stats. I didn't lose as much money, but it knocked me out of a lot of those winning trades too. So my win percentage didn't change, but my profitability did.
You were on Stock Dads today. How did that go?
Yeah, I recorded an episode of Stock Dads podcast. Really good guys, DJ Brown and Mike Sabala. They run a Facebook group called Stock Dads.
Stock Dads, Webull, Robin Hood.
Right. They added that. And, they have a podcast, where it's a podcast about...
Everybody has a podcast.
Yeah. It's a podcast about dads who trade, right? And it's more stocks or equity driven. I'm one of the few Forex people in that group, because they were telling me in the interview today, they have Forex as a keyword. So every time someone writes Forex, they get alerted because they're just bombarded with spammers and scammers. And, when I got in the group, I reached out to them. I DM'd them and said, hey, I know I'm in Forex. I know. Do you mind if I post my trade ideas? And they're like, sure, as long as it doesn't have any CTAs or... So I'd post my trading view things, and then I help people that ask questions, and I've created a decent relationship with those guys and people in the group, because I'm just trying to add value and help these individuals who found themselves in the world of trading. Now, a lot of times my videos or content is a little over a lot of their heads with, hey, we're bouncing off R2, you know, and when people are like, dude, I have no idea what you're talking about. It's like, I didn't either when I got into trading. But if you immerse yourself in these terms, you go to places like Investopedia or Baby Pips, what's support? And then there's usually a good video. If you're that serious about trading, you'll find the answers. But yeah, it's a great group. Did a great recording. You know, it was pretty much about me and how I got into Forex and some basics about Forex trading and how it's different than equities. But yeah, that should air probably next Tuesday. We'll put a link to it in our show as soon as we get it. Yeah, good guys over there.
I'm mad at you because I reached out to probably a dozen shows now and got rejected by all of them. And then you're just like, oh, well, I guess, screw 'em, Matt, I'll just do this myself. So,
well, no, dude, I think what it is you're trying to do it the formal way.
Correct.
Where I found two podcasts now just by, oh, you got a podcast? Oh, do you want me on it?
Well, we know which one works and which one doesn't. I'm going to keep doing it the hard way.
Yeah, I mean, I like going on other people's show and getting exposure. I'm surprised how many people have never heard of Forex and know nothing about it. In the trading world, a lot of these guys in this Stock Dads group have never heard of Forex. And one guy actually said, oh, is that MLM thing? You need to be in it. And I'm like, and I was like, MLM? Yeah. Like, I keep getting a call from some guy. They want me to buy a course that teaches me how to trade for, you know, a monthly fee. You have access to all these new, and then, you know, but the real business is how many people I could bring in. If you get double diamond status. And it's just sad because trading consistently is very difficult to do. You got to put the time and energy in it, and the time and energy in you, and create a plan and get yourself mentally prepared. All of those things that everyone wants to run from, right? Like fitness. We use fitness as a correlation all the time. There is no easy way out. You want to look like The Rock. You need to work out 2 or 3 hours a day. You need to be religious on your food intake, timing, micros, workout strategy. You have to tax those muscles from different angles. You can't just do the same routine. There's no pill. There's no hitting the snooze button, skipping, right? Oh, I did legs last week. It's cool. Or you're not going to get those results.
They've all heard of betting, though, haven't they?
Betting?
They haven't heard of Forex, but I guarantee you every one of those dads has heard of betting.
Yeah, I mean,
straight up gambling.
Who hasn't? You had a run-in with,
I did.
with gambling this week because they're blasting it, dude. FanDuel, Dual King, or DraftKings. I mean, what's DraftKings doing now? You could make a $1 bet to win $100,000 or something.
Yeah, they run special promos, and those aren't that interesting to me. What happened was, it's the start of football season. NFL was last week, and in construction,
that's all people could talk about.
That's all they talk about. I'm having very few conversations about hockey with people in construction. That's just the way it is. Anyway, I decided that I was going to get back in the action. I hadn't bet legally in a very long time, and I wanted to go through the emotional experience of ruining my weekend by having money at stake. I also wanted to figure out how I handled it and how different it is with a house, a wife, and 2 kids versus just a wife and a house versus being deployed and not being bothered. I got to tell you, I don't like it at all.
Yeah, because they were probably like, the disposal's clogged. Tim Allen used to do a stand-up comedy bit, you know, Tim the Tool Man.
Yep, Home Improvement.
Yeah, and he'd do this parody with his wife. How come every time I'm watching the game, you hear your wife in the kitchen, the disposal's clogged? You know, and if you ignore
because you get caught relaxing, that's why.
Right. If you ignore her, you hear the disposal's clogged. And then you ignore it again. You hear the disposal's clogged. But yeah, I can imagine you put some bets on. You're like, I got the lawn mowed, got everything done. Now I'm going to turn off football game and I'm going to watch the games I have money on. And there's always some emergency or something that's like, hey, we got to turn the game off. The kids are awake. And
it also it glues you to your phone because that's available now. Which has changed since the last time.
So you're watching the scores of the other games?
Yeah, and I didn't like it.
It's just like watching the MT4 app.
I got to tell you, dude. Right. I didn't like it. But what happened was I ended up putting the first game of the Premier League in England was this weekend as well.
So you went from football to soccer.
I went from football to football, right?
Football.
And Leeds just got promoted to the Premier League because they have relegation and they have different leagues in England and actually in the rest of the world. But they got promoted and they took on the champs, Liverpool. So I bet a plus 10,000 $5. The way that betting works in sports in America is a plus 10,000 is based on a $100 bet. So if I bet $100, I'm going to get 10 grand.
So if you could do a micro bet.
Right,
at
exactly.
5. Okay, it's like
a
fractional stock.
That's exactly right. $100 is a lot. One lot equals $100 in this sense. And that's what your odds are. So I bet $5 on a score on a plus 10,000, which means that I bet that Liverpool was going to win 4-3 Leeds. And that's exactly what happened on the last minute of regulation.
What's a lead?
Leeds is the team that they played.
Oh.
This is significant because my wife is from a town near Leeds, and they finally got promoted, so we were watching the game, and it was a big deal.
And you bet against her team?
I bet against her team. Now, she doesn't know any of this, and she doesn't listen to the podcast. She doesn't listen to the podcast, so I'm not bothered. She doesn't know any of this.
Well, so you had to bet the exact score.
I bet the exact score because of the risk to reward.
Right. I was going to say, for $100 to win 10 grand, for the house is going to be like, yeah, the odds are pretty slim.
Plus 10,000. Right.
Right.
So plus 10,000 means 100 to 1. And it hit. So I put in $100 as my opening balance on my live account. And
is that the minimum?
I don't know what the minimum is.
Can't imagine it'd be like, sure, bring $5.
But I bet 5% of my account value on this for 100 to 1 payout.
Pretty good payout.
Right. And I hit it. I hit it on the last minute of regulation on the penalty kick.
Nice. So were you jumping up and down?
Well, no, because I was holding my passed out baby and I couldn't do anything. I couldn't tell my wife because I don't think she likes me very much. But I also couldn't tell her that I bet against Leeds, so it wouldn't have mattered.
Yeah. And then she'd be like, we could have bought formula with that $5.
So then I texted you. And what's the first thing you said?
Gambler.
Yep. And then you said I was going to get addicted.
Right.
And then I was annoyed at you because you play the lottery because of your FOMO.
Well,
And I was like, dude. And then I told you what I'm going to do with the money, and I've already done it. I put $100 in. You know, I've lost a few bets along the way. You know, just little wagers, $5, $1, $2 each. And I'm now at $563. Okay. So I'm going to take $400 out. I've already hit my break even plus a little profit. I'm going to take $400 out, which gives me the $163 at $100 initial deposit.
Right.
That $400 is going to go to our marketing campaign. So
Perfect.
I'm taking that $400 and we're going to learn the next part of Allen FX of the day trading plumber,
Right.
which is
Facebook
ads.
Facebook ads.
But that's because I'm playing with house money at this point.
Right.
So I better accept and realize that I flat out got lucky. There wasn't any skill in that. Flat out got lucky, and I'm going to put it towards something that can gain me more later.
Well, a lot of sports gamblers think they have an edge. And I don't want to be, maybe some do, just like in trading world.
Well, Sam Rothstein in casino.
Some people are gifted. They do their homework, and they have an edge. Now, here's some differences, good or bad, pros or cons, that compared to trading, and why trading can be massively more dangerous. Because you bet $5, right? You had shitty odds, but that's why they'd pay you
1 to 100, right?
Right? 100 to 1. But it worked. But that $5 was the most you could lose. Here's what happens in trading.
Stop loss is built in.
Right. Your stop loss was built in. You can't change it. Trading, you have to consciously enter that stop loss. And then imagine the game wasn't going the way you wanted to. And you can move that stop loss and now go, I'll double down. I'll double that $5 to 10. But what's funny is that, like in trading, usually people move their stop loss only because it's going against them, right? Like that would be like you doubling down when the score is obviously not going to get there. And what that is someone not wanting to realize they were wrong. What's great about what you did, stop loss is set, your winnings are set, your take profit set, and now it's just up to fate. That is what a lot of people are trying to do in trading, like set it and forget it, but they allow you to move that take profit. So a lot of times, imagine if you could move that take profit when it was looking more and more like it might happen. You go, well, I want more money. So you get greedy and you move it up higher and like, hey, now that it looks like you might win, do you want double the winnings if its score changes to this now? You'd be like, yeah. That is a trap that a lot of people early in their trading careers need to curb that emotion. That's why set it and forget it strategies are really good for a beginning trader, because what you're trying to do is be like, look, you're going to risk 1%. Just, it's gone already. It's out of your, it's gone. You're either going to win or lose. You're not going to touch that finish line or the stop loss. You can't, because you're not there yet. I will tell you, after 10 years trading in this market, that is where all my problems still live. I could increase my profitability and my win percentage by managing open trades. Or I could fumble it all up because I get knocked out, or I'm watching a 1 minute candle. Oh, it's going bearish. Just get out. And you find yourself taking smaller wins and bigger losses because for some stupid reason, we're all wired to hold on to that loser longer than we should have, because we go, I want to be right. Now, I'm glad you did that, because how euphoric was it? How bad did you want to take the next one?
It ruined the game for me. I couldn't enjoy the game.
I quit sports betting on the Broncos a
Wow.
long time ago.
Well,
Because I always
that's
bet
the smart play.
I always bet that they're going to win.
Yeah.
Because they win majority of the time.
It ruined the game for me. I should have been excited that Leeds were finally in. And it's interesting you haven't heard of Leeds because they're a major financial city in England.
I've heard of Manchester United.
Okay, we're going to stop talking about that. They're,
Why? Are they a rival or
Manchester United are a rival. They're west of Leeds, and it's the equivalent of hating the Yankees. People are Yankees fans because of the Yankees and they always win. And people are Manchester United fans because they always won under Sir Alex Ferguson and then even before him. You can't be a Manchester United fan without owning a tracksuit or 7 of them.
Do you know
just the cold
do you know
rule.
why I know that team?
Because
they stayed at my hotel.
And they won a lot. Yeah, they were probably here when they played Roma in Denver.
Yeah, they stayed at my
summer.
hotel, and there's thousands and thousands of fans.
Yeah,
and
exactly.
teeny boppers.
Right.
Because they're, a bunch of good looking dudes.
But yeah, it ruined the game. I immediately thought, shit, I should have put $100 on it. Because isn't that how it goes?
Well, every time you win a trade, you go, that's the one I should have had 10 lots on. And then here's what happens. The next time you trade, you put the 10 lots on. You throw your money management out the window. and your trading plan, and you're chasing that big historic win. The only way to win in this game is you know the strategy you're trading, you know the win percentage, and you stick to the plan. I'm going to risk 1%. I am going to take my profit at this level. And even if it blows past that level and just keeps going and you missed out on more profit, how did you backtest it? Because you may miss a couple runners that go past that take profit and you missed out, but you might over optimize yourself taking more losses. So when you backtest the strategy, right, like I said, write down the rules, do not change them, get 100 trades on a pair or many pairs to get a bigger data cluster. And then you can go, what if I make this one change? Then you got to do it all over again and compare. And when you've optimized it and you've come up with what you feel is the best plan, and you're going to trade it and you're going to put $50,000 in a live account, you better stick to that plan. And there's no, this time 10 lots. And, you know, this is like what we talk about with building a trading playbook. Because if you only have one strategy, you got to be really good at not trading when those setups aren't there, and really good when the markets change, like this COVID, you know, where my mean reversion strategies weren't working because, let's just face it, price was going to new levels. They weren't reverting back to their mean necessarily like they were. So, you know, you switch to your momentum. It's part of your playbook. Just like the I formation, the spread. We talked about that. You got a playbook of different plays. Risk to reward really comes in play to keep, for instance, if you only take a 1% loss on a trade, you can come back from that. Right now, my strategy, my day trading strategy, I never risk more than 1% per trade. Sometimes I'll risk 1% plus spread if it's super tight, because my back testing was based on 5 pip stop. And, you know, when you do trading view replay, it's really hard to go, oh, what was the spread at that time? Oh, So, you know, you laser in on the entry and I just kind of compute with this many lots on this pair, it's averaged out. I'm already down 150 when I get in the trade. So I'll just subtract 150 from that profit or add it to the loss. My plan right now, or my rules, I'm never going to risk more than 1% per trade or 4% total. So I can never be in more than 4 trades unless one of them is in profit and I have the profit or stop loss at break even. Now I'm able to take another trade because I never have more than 4% at risk. So if I have a fucked up day and all 4 trades I opened with the strategy I'm trading, which historically doesn't, you know, I've never traded all the pairs at the same time in back testing, only each pair. So it very well could happen. I could just be the unlucky day where the 4 trades I put on all have their loss, but I walk away only 4% down. That's recoverable. If that ever happened to me one day, I'm done for the day, I would tell you, because no more than 4% at any given time. So if I lose 4% today, I'm out. New day tomorrow. And it's rules like that that are going to keep you in the game, because you may have that very next day, you might win those 4 at $1,200 a piece. And great.
I was at 40% risk going into Saturday.
40% risk?
Which listening to you really annoys me that I let it get that high.
Because you took a bunch of losses before you got that.
Well, no, I had $40 on the line on a $100 deposit. I had $40 on the line.
Right.
And I'm annoyed that I let it get that high. However, I do have several $1 and $2 future bets. And the future bet is the long-term play of, like in cycling, because I follow cycling a little bit, and I have a buddy who's an expert.
You're betting on cycling?
Right.
What does FanDuel have? Girls softball in Chattanooga, Tennessee?
The Tour de France is going on right now.
Oh.
Which is great. I watch that every year.
I've heard of it.
I don't know what I'm looking at, but I have a buddy who's into it, and he's one of my best friends. And so
do they have like
I trust everything he tells me about cycling, and he trusts everything I tell him about hockey. Anyway, so I have futures bets on points and podiums. But those are all, every one of those bets that I took at $1 and $2 is 5,000.
Right.
Plus 5,000, plus 10,000. So 50 to 1 and 100 to 1 at $1 and $2
and it's a dollar.
And it's $1 and $2, correct?
I mean,
and more importantly, on the fundamental side, it forces me to pay attention to cycling. And I do like cycling. I don't understand it, but I do like it. I appreciate the athleticism that goes into it. Lance Armstrong was a big part of why I like cycling anymore, actually. And I do appreciate that these guys are athletes and this is a whole lifestyle. And I like looking at people who are really good at what they do.
what was the whole thing with Lance?
Oh, he totally cheated.
Well, he was doping.
He was blood doping.
Which means you switch your blood out with
clean blood.
that holds more oxygen.
Correct.
Why is that cheating again? I mean, because everyone else can.
Why is it cheating when they all do it? I don't know. It doesn't matter.
Well,
It doesn't matter.
it's like, for instance, steroids. Yes, it enhances your body. You can recover faster. It puts your body in anabolic mode so you don't break down muscle. You could cheat on your diet a little bit and still gain muscle. It gives you, as a male, it puts you in that competitive mode. But you still got to do the work. There's this misconception that like you could just take steroids, eat whatever you want, not work out, and you're just going to look like chiseled man.
Well, it's a lot like consuming content. You can go to school and you can watch YouTube videos all day, but unless you're practicing the craft, it doesn't mean anything.
Yeah, and my thing with like steroids, if a man or woman dedicates their life to a sport to the point where they can be injured and out, and at the level that these people are playing, let them use steroids. I mean, controversial subject, but I want to see people hit home runs 600 feet. Personally, I don't think there's that much danger using steroids if it's under doctor supervision, which most of these people have the money and resources to do correctly. And, you know, my thought is if baseball just legalized it, then they could manage it. It's a lot like legalizing marijuana. Now you can make tax revenue off it. I guess I'm missing if they're doing it, then the kids who want to be baseball players are going to do it. And let's just face it.
That's right.
You know, they're role models.
Well, that's the problem, isn't it? Chuck Barkley was correct. What was that, 30 years ago now? I'm not a role model.
Charles Barkley?
Yeah, I'm not a role model. And he was right. And I knew at 10 years old that he was right. Because I thought, I don't look to these guys for guidance. I don't want them to help me with my math homework. I want them to dunk and shoot three-pointers. That's all they will ever be to me.
Well, somehow we've glorified athletes.
Well,
and actors.
They have spent their entire lives perfecting their crafts. Johnny Depp is a great actor. Tom Cruise is a great actor. Tiger Woods, probably the best golfer ever. Most entertaining for sure. Now, I didn't grow up in the Jack Nicklaus days. Michael Jordan, without question, best basketball player ever. Followed closely behind by Magic Johnson. LeBron's not in the conversation. But they've spent their entire lives practicing their craft. These people haven't read about economic policy. We know a lot of them haven't read about the Constitution or even read the Constitution. So why are they anything more to me than an entertainment outlet at any pace? I don't care what political spectrum any athlete is or any entertainer is. Comedians, yes, because that's their element. But I'm not interested in what a comedian has to say about economics. because that's not what he's been studying. It's not his thing.
Yeah, I mean,
so it's all about context.
But people are just in this mode right now where they want to use their platform. Look at the influencer. That wasn't even a job title.
Right.
Now it's one of the highest paying jobs, right? Become an influencer. Thanks, Kim Kardashian, for creating.
And Paris.
Paris. What happened to Paris?
Oh, did you know she's the heiress of the Hilton chain? So she can afford to just like disappear.
Well, I know, but just like her and Nicole Richie just.
Nicole Richie, the heiress to one of the greatest songwriters of all time. So she'll be all right.
Next time you make a decision, try to analyze all the pros and cons. It's just like risk to reward. When you're getting into trading, if you're new to trading, you've been doing it, you're struggling, try to focus on risk to reward. Is the risk I'm taking worth that reward? And what's my probabilities? Then you'll start to connect the dots. It'll keep you from getting in bad trades. It will keep you from FOMOing into trades. You got to wait for that right setup and get it at the right price in order to have that stop loss you want. If you start setting that stop loss, sticking to that risk to reward, and your trades aren't working, and you entered them right, maybe your system or your strategy needs to be adjusted at that point. That's what I'm struggling with now, because historically I let a robot enter and exit the trades. Now that I have a lot more time in my hands and I'm doing this, see if I can make $50,000, which I started this week. Doable. What I'm trying to do is take $50,000. Can someone make a decent living and still grow that account small? Obviously, I don't have a lot of needs. I'm debt free. I don't have a lot of bills. So I can live pretty scarcely for a while, which most people need to do if they want to become a full-time trader. But I'm trying to see if I could do the impossible. Take $50,000, day trade it between 4 a.m. and 11 a.m. Mountain Standard Time, and occasionally trade the Asian session, but it always seems like I give my money back in that session. But try to make enough profit to where someone could pay themselves a decent amount of money, nothing crazy out of the gate, and still grow that account and give themselves a raise each month. So far, I've got ahead 2% this week, and then now I'm down 1%. And we're going to see how the week ends on week 1. But yeah, I'll give Matt my FX book link to share with the show on my live day trading account.
Thank you very much for listening. Please join us next week.
Over and out.
If you'd like to learn more about Clayton's signals, please visit www.alanfx.com. You can find me on Twitter, Instagram, and Telegram at OFPMatt.